and welcome to the market update for Tuesday, October the 18th. As always, if you have any questions during the week or any questions I don't get to in the class today, make sure you send those to jerry@traderspro.com. If you're new and this is one of your first updates, make sure you write that down so that you can get your questions to me during the week. All right, thanks everyone. Let's get started with the direction alerts. Again, what we're going through here is just we're trying to get an idea of, is the market overbought or oversold? Is it stretched one way or the other? We don't want to look too much into each detail, or we don't want to overanalyze this. Sometimes when you're looking at any indicator, there's a tendency to kind of overanalyze. It should be pretty obvious, and that's what we're looking for. We're looking for extremes, really, and then we're going to go and look at the trend. We're going to look at the charts and see kind of where we're at within those trends, and whether or not it's a good entry point or not. Now we're at a bear market, so we're not going to be looking to buy a lot of stuff right now. We're waiting kind of for the market to bottom and start showing that it's working its way back up before we'll start really, at that point, really analyzing the strengths of the software. I mean, it can still point out the strong performing stocks within the bear market. We've been in oil, we've been in defense stocks and some of these consumer staples, but the software is designed for really maximizing gains within a bull market, bullish trend, and right now, usually in these bear market conditions, your choices are either sit out and do nothing, go to cash, wait for it to kind of bottom out, wait for all the carnage to hit, or you can try to trade it with kind of shorter term type trades, and that's what we've been doing in the portfolio. So if you're wondering why I'm kind of jumping in and out of some things in the portfolio, all I'm trying to do is see if we can make a little bit of money while we're waiting for the market to bottom. All right, so let's go through the direction alerts. We're still in a bear market. We're deep in a bear market, but we're still not seeing those signs that it's done yet. But at the top of the list, we're still kind of waiting for that panic sell-off. I'll show you on the charts that it might be happening. We might start seeing it sooner rather than later if today's kind of price action holds up into the close. But momentum is off the extreme range, so we're almost right in the middle here. So we're not in an extremely oversold condition. Remember, we were in that condition last week, and that's why I felt like we could bounce a little bit from there. We've rallied up a little bit. We had that big bullish reversal that took place on Thursday, and then Friday. We'll talk about that when we look at the charts. Friday, we've just been whipsawing around, and so it's been a little bit crazy over the last couple trading days, but we're not in an oversold condition for momentum. Now with Brett, we're in the extreme range, but we're more towards the right side of that extreme range. So we are a bit oversold as far as breadth is concerned. And what does that mean? Well, it means that, go back to Thursday. We saw a lot of participation in the rally on Thursday. There was a lot of stocks that were participating in that reversal. I shouldn't say really rally because it was just mostly a reversal. Open lower, we were trading back up, and so that was encouraging. I felt like there should be some follow through to that. But over the last couple of trading sessions, the breadth has not been very good. There hasn't been a lot of stocks participating in the movement of the market. So I think that's why we're still seeing this in that extreme range. But it is off of it is over to the left side of that range. So could the market still sell off from here? Yeah, it could. That's what we're going to see when we look at the charts. There is still some room for us to rally up a little bit further before I expect the downtrend to continue. You always have to allow for that when you're looking at your charts, that there can be a little bit of an extra day or extra move, or a lot of times the markets will try to hang on. There'll be some last second buying and attempt to push things higher that fails, or last exhaustive selling that takes place before the stocks resume their rally, things like that. But it looks like we're getting real close. I would assume that sometime this week we should start that next move lower, and probably could be within the next day or two. But there is some room for us to go back, to drop right here. That would probably push this indicator to the far left side and into that extreme range there. And then obviously sentiment is still really high. We're still in the complacency range, although we've moved off of the extreme. We've seen the elevated VIX. We'll take a look at the VIX here in a little bit, and I'll share some thoughts on what I see happening with the VIX behavior and what that could mean to the future movement of the market. So again, those are not showing any extreme levels. Buy-sell ratios have come a little bit closer together here. A lot of that is the sells going to holds, but you can see we closed the gap. This would be an extreme area when they widen out. It means your buy and sell ratios. They're well. I'll show you what it really means. If you want to know what's going on with this, it's just visually showing you what's happening. If you go to the index tab right here, it's visually showing you what's taking place in these indexes. So a good example would be just to get a real broad index right here, the Russell 3000. You can see you've got your buy, hold, sell boxes here. Out of the 3,000 Russell stocks, 429 have buy signals, 470 have sell signals. As the market rallies, you see a lot of these sells go into holds and some of the holds go into buys. When you see the market selling off, you see a lot of these buys move into the hold range and these holds move into sells. And you get this ratio right here too and right now this is showing me, if you remember a couple weeks ago, we had a pretty big sell-off. There was very few stocks that had buys. I mean, we were in double digits. It was like, 50 stocks in the Russell 3000 that had buys, and a huge amount. We were in 1,000 range or might have been, it was like 1,500 or something like that were in sells. So it was showing an extremely oversold condition. If you remember when I pointed that out, we combined that with those direction alerts that were showing that the market was oversold, and I said, boy, we should be getting a bounce here pretty soon, and we did. Within a day or so, we got that little rally. Where we're at right now, we're not showing an extreme. We're obviously not showing an extreme, but because of that, it's showing us that you're not going to get a big overbought extreme within a downtrend in a bear market. So you're not looking for an extreme on the bullish side would be if this ratio starts showing double digits, like 12-1, 12 buys for every one sell, 15-1 or something like that. Those are extremely overbought conditions. You don't see that in bear markets or even bear market rallies. You see it in bull markets, at the top of bull markets or top of bullish trends. You see that extreme. So all we look for in a bear market rally is, are you alleviating the oversold extreme? And we have right here. You can see almost an equal number of buys and sells. That tells us that we're in a position where we could resume the downtrend. We could go lower out of this based on what this is telling me. And then lastly, this sentiment indicator here has been moving up a little bit. We're more towards the oversold side. This green line down here. You'll often see when this indicator gets down that green line, you'll get a market bounce or rally off very often off of that. Although it can dip down even below it, it can become really oversold. And we're in an area where we've alleviated that oversold condition. We could still have a market that drops and pushes that closer to that to another oversold condition. All right, let's take a look at the charts. And I really want to focus immediately on the price action of today. This is a very bearish, well, if it holds right, well, actually, even if it rallies up to where it opened, it would still be a bearish price action, because what that would tell me is it's showing buying exhaustion. We opened higher, it slipped. So we opened up here, we gapped up at the open right here. We had a really strong open, and then we dropped all the way down into here. So the buyers were not able to hold that open. Sellers were able to push the prices all the way back down. Now we've seen in the last couple hours that we've been slowly moving back up. So buyers are able to are attempting to push the price of the market back up again. But even if we do close higher than where we open, when you see this type of price action, when the market's already been moving up, it's telling you that there just aren't enough buyers. The buyers aren't strong enough, or it's taking a lot of energy. Even if we do close positive, it's going to take a lot of energy to close the market higher. And so, and again, that alone is not something you wouldn't want to short the market on that alone, but it's recognizing that that's not a healthy. The buyers just aren't strong, and they're showing you they're not strong. Now, sometimes what can happen if the market were to recover and close where we opened, either right at where we opened or above where we opened, you could see another attempt to try to move higher tomorrow. But it's usually when you've already started moving up, you start seeing this price action at a above or after a rally of some sort. It usually leads to another move down. Now, this was one that did close positive, right? So on this day right here, it opened right here, it dropped all the way down to here. Buyers pushed it up and pushed it higher. You can see that was it. It tried to rally again the next day, couldn't go any higher the next day, and then bammo, it dropped back down again. So, could this be the outcome of today? Could we see it actually come all the way back up and go positive? It's possible. I don't think it will, just because we're getting closer. We're only in a couple hours before the market closed, and we still have a long way to go to recover to get back up there. And usually, anyone knows how to read a candle or read the price action reads that as being bearish. So if I'm a big institutional trader and I know what I'm looking at, I don't want to be buying right here with that type of candle. And so it almost becomes a self-fulfilling prophecy. They see that, they see the weakness, they don't want to be buying into that. And it creates it creates that candle. It shows that buying weakness. So now this fits into a pattern that I talked about last week, especially when we had that reversal. So we had the reversal on, and actually this shows up a little bit better on. Let's go to the Dow chart here. There's a couple versions of this. On the Dow chart right here, we had that big bullish reversal candle on Thursday. So what happened on Thursday, the market gapped down pretty big and immediately rallied back up. By the way, this is the opposite of the behavior of kind of what's happening today. We gapped down, and then buyers showed up, and they pushed the market all the way back up. We had this bullish engulfing pattern, a massively bullish engulfing pattern. And there was a lot of participation. There was a lot of stocks that had the same price action. A lot of these engulfing patterns or bullish reversal candles on a lot of stocks that day. And then, but yet Friday, it just reversed it. And we all tried to open higher and then sold off in a pretty big way. Particularly like the Qs was a really ugly sell-off. And then Monday, we reversed right back up. Now, there were some things that were taking place on that bearish reversal that took place on Friday that the VIX didn't spike up on it. That was a weird thing. You're thinking, boy, that's pretty bearish. We had this big, strong, bullish reversal day. So we have a bearish reversal day the very next day, and there's not any worry about it. The VIX isn't moving up. In fact, the VIX was kind of coming down. So I didn't really think that was going to lead to a big sell-off or a panic sell-off of any kind. And sure enough, we covered a lot of that yesterday. Although again, yesterday's move, we gapped up. So here's where we closed on Friday. We managed to gap up, but we didn't move very far. We couldn't get above Friday's open, and that concerned me a little bit. There's a little bit of weakness in the buying there. It was really kind of a coin flip of how we would open today. But then, so again, what I'm trying to teach you here or show you is this stuff kind of builds, and if you know what you're looking at, you can recognize, hey, this is strong or this is weak. So we couldn't close higher than yesterday's open. Now today we did open higher, but then what immediately happened? We sold off. So it's this whole last few days is not showing any sort of buying strength at all after having that pretty nice bullish reversal candle. So it tells me that this is all probably just a rally within the downtrend. We're just setting up for another move down. We alleviated that oversold condition because remember, we're down here, the market was getting oversold. We needed to probably alleviate that a little bit. But now we weren't extremely oversold, but remember I talked about how we could probably get a little bit of a bounce right here, and I think that's what we're getting. And what it looks like to me is that this is wave A, wave B, wave C of that correction. Now, as I mentioned earlier, there could be a last-ditch effort to try to go a little bit higher or try to go higher again, but I would expect that we're going to, if this holds, we should start to see the market move down, and probably as soon as tomorrow. Now, I know we're in earnings season right now, and there's going to be a big focus on earnings that are coming out. Netflix reports after the bell today. What if Netflix has good earnings and the stock is moving higher? Could that be a reason that maybe the market tries to open higher tomorrow? I don't know. I can argue with that, though, because I'm telling you what's probably going to happen this earnings season. This is something to pay attention to. Remember what I've been saying lately about don't fight the Fed. We don't want to be fighting the Fed. The Fed right now is trying to crush the economy. They're trying to slow down the economy. They're going to keep raising rates until they see unemployment rise, until they see pain. There's going to need to be pain in the markets. So, and that also means that earnings need to be coming down. That you got to see the effect of the economy slowing down in these earnings reports. So companies that are going to be beating their earnings, that's going to be negative for the Fed. The Fed's going to look at that and say, we're not done yet. We're going to still tighten. We haven't seen, that's not what we want to see. And so good news is probably going to be bad news. And it's weird. It's demented. It doesn't make any sense. But that is the world we're living in right now. We have a jobs report that is good, and it's bad because it means the Fed is going to keep tightening until they see unemployment go up. But you have to understand that mindset, because otherwise you're going to be on the wrong side of the market here, because it really is don't fight the Fed. You have to know what the Fed is doing, and that's what the Fed is doing. So anything that's going to be positive is probably going to be negative for the market. And so, negative could be negative. If Netflix goes down after their earnings report, it could be all these. You remember, all these analysts, all these professional traders have not seen the earnings come down yet. They base a lot of their decisions on earnings coming down and on earnings in general. If they start to see earnings start to come down, they've got to sell. So I just see a scenario where good news is bad news and bad news is bad news. I don't see an earnings season right now that's going to cause the market to go up significantly, at least not right now, at least the way I'm viewing things in the context of don't fight the Fed. I just don't see how being long this market is a smart thing to do, either on the sidelines or like in our portfolio pockets of the economy or that are probably going to go up even if the market goes down, and then hedging with those inverse ETFs from time to time is kind of kind of going to be the way to go. And again, unless you're going to just sit on the sidelines and do nothing, which is not a bad strategy either, if you're really trying to protect something like your retirement account or things like that. All right, so that's kind of the context there. Now the S&P chart's a little bit different though, because it did go lower on that move on Thursday, so it opened lower here. So could this be wave A, wave B, wave C? It's possible. We would call that what we would call a regular ABC pattern, where wave B can go beyond the end of wave A. Usually it can't go very far beyond the end of wave A. And since this all happened in one day, could that be enough to where that's wave B and this is wave C and then we drop? It can, but here's the problem I have with the regular ABC patterns, and that is that they're very rare. And so, again, my mind is wired to look at probabilities, and it's hard for me to say, okay, I need to expect that to be the low probability event. That's a irregular ABC pattern. Now, within the context of some of the other indexes, it would make sense, because obviously the wave B, if that is a wave B on the Dow chart, didn't go below that low. It only did it on the NASDAQ and the S&P. The Russell 2000, it didn't go below that. And to be honest with you, it doesn't matter that much that we get too hung up on that. One thing I'm kind of watching with the S&P chart is this down trend line right here. I know that's not the straightest line, but we are right at the resistance of that. We're also at the resistance of this area up here, or close to it. And we're getting a bearish reversal candle right here. So whether you want to label that a bearish ABC, or remember on these drops, we didn't really get an ABC on these drops. These were just rallies and then drop, rally, quick rally and then drop. Could this just be another quick rally and drop? Yeah, it would fit into the same idea, same context. So again, I'm not going to get too hung up on is this a bearish ABC pattern, wave A, wave B, wave C. All I'm looking at right here is that we've got a declining trend line. We're at the trend line. We've got a bearish reversal candle. And even here, there's still room where it may, again, maybe it tries one last ditch effort to rally higher, but there's so much resistance right here. I just can't see it breaking above that. Now, this market has shocked me. I never expected that bearish reversal on Friday after that strong bullish reversal on Thursday. But you know what? I've come to a conclusion that I've started to accept the fact that this is going to happen a lot more often. I go back to what I've been talking about recently, which is that, everybody is expecting this panic sell-off, right? And so if everyone's expecting a panic sell-off, then, you shouldn't feel like you want to buy at a market bottom. You don't want to feel, if you feel like strongly that you want to buy it, you're not at a market bottom. It never works that way. It's always, a market bottom is always put in because people don't feel like buying. They're scared to buy. They don't know how much further it's going to drop, or they don't know what the market's going to do next. Well, how does the market create that confusion of not knowing what it's going to do next? Well, it makes moves that don't make sense. Like on Friday. Friday, I was sitting back saying, I literally was sitting at my desk saying, what is going on? How do you have that strong of a bullish reversal and not move up the next day out of that? And again, sometimes you don't. Sometimes you get a pause after that type of reversal. So I never expect that you're always going to get a follow through immediately to that. But this thing dropped. Look how far it dropped. It dropped more than half of that whole candle. It came all the way back down to those support lows right there. And I'm thinking, what is going on? And I think that's what I'm trying to embrace right now, is I think a lot more of that is going to happen. that's why it's important that we pay attention to the trend, but also realize in the near term that trying to predict it. If you've been in this class for a while, there are days on Tuesday where I do the market update and I say, there's such a high probability this market is going to rally. And then Thursday we have class and we have the rally. It almost looks prophetic, right? It looks like, how did Jerry know exactly what was going to happen? Or we'll talk about something, we'll probably get it rally up a little bit further and get a reversal. And then we rally up a little bit further, we get a reversal, and we're talking about it on Thursday. And it's like, it's like the market's doing exactly what we thought it was going to do. I think what we're going to see more of late in the near term here is more erratic moves in the near term, meaning we're still going to be in this downtrend. It's just going to be harder to predict what's happening day to day. And so, in other words, we've got to expect more of these days that happen on Thursday and Friday, where it looks bullish one day, looks bearish the next day. I mean, we flip-flop back and forth. It looked bullish, really bullish on Thursday, pretty bearish on Friday, fairly bullish yesterday. I'm not going to say really bullish, but fairly bullish, and then really bearish today. So that's why I'm leaving the possibility that it has maybe another bullish day where maybe it's mildly looking bullish, but still not strong. But then we're not losing sight of the fact that we're in this downtrend. This is probably just a rally within the downtrend. Let's not forget that. So I'm not going to be able to know the day-to-day stuff very well, but the longer term, we don't want to lose track of the longer term trend, because that's what we're in right now. We're in this long downtrend. And by the way, with the VIX being elevated right now, we've been for 2 weeks, I think almost, we've been above 30 on the VIX. That means that you're going to have this type of volatility. That's what it's telling you, is you're going to get these bigger volatile moves back and forth. And so it shouldn't be surprising. And I think as long as we're up above 30 and stay above 30, we're going to see more of this type of stuff. Although I think the next big move is going to be one of these big downward moves. And it could be one of those that spikes the VIX up above 40. Now, again, a move above 40, what does that mean? The market's not going to get above 40 on we've seen Dow up 500 points, Dow down 500 points. We've seen a lot of that lately, and that's the behavior of a VIX above 30. Okay, a VIX above 40 is Dow down 2,000 points, or Dow rallying 1,500 points, or something like that. That's what you're going to be expecting. So if you wake up one of these mornings and you're seeing the Dow down 2,000 points, or 1,500 points to start. Maybe it's down 1,500 points and it's going lower. Go pull up a VIX chart, and I bet you we're at 40, or very close to 40, or above 40 in that situation. And this is kind of what it feels to me like it's setting up for. It feels like we're in this C leg of a possible bearish ABC pattern, and we could start to resume that. And then you go back to the direction alerts, and the direction alerts are telling you that we're not extremely oversold. So we could drop right from here out of that area there. And we could also rally up a little bit further too. But again, I'm just not seeing. See, back here, you at least saw, here was a bullish reversal day, opened down here, closed up here. You had been dropping, going lower. Next day, it opened a little bit lower, but they closed higher, so the buyers were able to push it higher. Here it gapped higher and moved higher. Here it gapped higher and moved higher, although the candle was getting smaller. There was nothing in here that signaled this drop, but that was at least, I remember thinking, boy, maybe this is going to be a decent rally here, because it was behaving pretty well up to that point. Although I think on this day right here we had light volume on that last day. Let me put the volume bars back up here. Yeah, see, we were rallying higher, but we were starting to see declining volume on each of those rallies. But still, that's not enough to say, well, that was obvious we were going to drop down the next day. We never got a a strong bearish signal that it was going to drop down. But when it did, obviously, when it dropped down, you're assuming, okay, now we're probably going to be resuming that downtrend. So but that's not what we're seeing here. We're seeing just weakness in this rally. And I think today's price action is signaling that it's probably very close to reversing. Now, having spent all this time talking about that, watch it closes, and it closes real strong, and it obliterates my whole argument. But I don't think it will. I just don't see that changing much between now and the market close. All right. Let's look at the Qs. You can see the Qs had it had the bigger drop down. So again, if I'm trying to say that's wave A, wave B, wave C, that's not. This was the correction here. That was the impulsive move down. This is probably the correction, and we'll see if it has another move down. This one's right at that trend line too, and so it's very similar to what we're looking at with the S&P. I know it's not a straight line, and actually the line, if you draw it right off the top here, there's still some room where it could move up a little bit further and still be underneath that trend line there. But again, that price action doesn't look like it's going to really go much higher there. And then the Russell, I told you, had looked the same as the Dow, where it could be that was wave A, wave B, wave C. By the way, what you look for in an ABC pattern is typically the ABC pattern will complete when wave C is about the same length as wave A. It can be a little bit shorter, a little bit longer than wave A, but the keyword there is about. It looks, usually for me, it looks pretty close to the same length. And where we're at right now would look about the same length as wave A. And you're getting that bearish reversal candle right here. Now on this one, you did kind of break above that trend line a little bit, but again, that bearish reversal candle is pretty. Well, actually, this is not as strong. Remember the others? We opened at the highs of the day. This looks like it rallied. I don't know if that's. So you got to be careful sometimes with, like, let's go back to the SPY chart. The SPY did not move all the way down to here yesterday. It actually was right. In fact, you can see it if we look at the SPX. This is the. If I can pull up the SPX here. Well, let me pull up. I can on my. Let me pull up on another chart. So you see right here yesterday, we opened at the lows of the day. We didn't go all the way down to here. So what happened was we call this the trading term for it is a bad tick. What happened was there was some trade that was probably an accidental trade of some sort that showed a price all the way down into here. But it was probably a mistake, and it takes a few days for those to get corrected. And so, and it can be frustrating because you're like, well, how do I know when it's a bad tick or not? The tough thing is on individual stocks, it's hard to know. But at least with the indexes, I can compare it to the other indexes. Did any of the other indexes make that distinct sharp move down? That was a big move down that's showing. Or if you're watching it during the day, it never made that move down, and so you know that couldn't have been correct. You could also know if it's just doesn't, like, it's extreme. Like, how did it drop down that far? If you have the ability to go into an intraday chart, you can look and if you saw that it dropped way down and came way back up within a minute or a second or something like that, it was probably a bad tick or a bad trade. But anyway, I just wanted to point that out because that's what happened on the SPY chart. And I have been paying attention to the Russell, but because I don't know if it rallied higher at the open, but I don't know if that, maybe that's a bad take. I don't know, because I'm not seeing it on any of the other indexes. But if that was a true move up here, then this could end up being more of an indecision candle. If we rally up a little bit closer to up to the close, you've got tails on both ends, a small body. That's called a spinning top candle formation. But you got all the other indexes with bearish reversal candles. Russell with an indecision candle, not as strong a bearish reversal, but you would. That's why we look at all four indexes, because there's things in there that we might see that we're not seeing on the other indexes. And all we're trying to do, we're not trying to have anything tell us exactly what's going to happen. We're trying to gather clues and then come to a conclusion based on those clues. Question, is it possible that the drop last Thursday was a wave 5 down and now we're retracing an ABC back up? Yeah, that's definitely possible. He's referring to Elliott wave analysis. And what he's wondering is, was this wave 1, 2, 3, 4, 5? As markets tend to trend in 5 waves, and then they correct. And is this a correction? By the way, if you were to look at this move in a 60, I can do it. Let's go to my other charting service and look at a 60-minute chart. So this would be an hourly chart where each one of these bars represents 1 hour of trading instead of a day of trading. So we're zooming in on what's just happened over the last, since we bottomed. And you could make the argument that this is a bearish ABC pattern right there, pretty distinct on the hourly chart. Notice how today we had the sharp move down. We kind of choppy as it's moving back up, and now it's starting to reverse back down. Let's see if it starts to head lower into the close. I didn't mean to. I don't like to be jumping back into different charting services, but because of the fact that this was sluggish, this rally was really sluggish and back and forth. That's what I would expect to see if you zoomed in on an hourly chart, is that you'd see the more distinct ABC pattern in that smaller time frame. You don't need to necessarily do that. And to be honest with you, if you have to see it in the hourly time frame, could it be that this is 5 waves down? This is another possibility that we'll have to consider. Could it be that this is 5 waves down and this is just wave A, and yes, we drop over the next couple of days, but it's just wave B, and then we get wave C, and it does something like that? Yeah, it could play out that way. And maybe that's what we're dealing with, is that we're not going to get a massive drop right here. We just get a 2-day drop or 3-day drop. It's wave B, and then we rally up again. Yeah, we have to look at that as a possibility, because that's what these corrections tend to do. They tend to take more time, and we really haven't had a lot of time in this rally, although we didn't have a lot of time on these either. It's just 4 days drop, 4 days drop. And I guess you could make the argument we're at 4 days on this attempted rally, so maybe that means we've got to drop now. But yeah, it could be that that's what we're in as far as an Elliott wave count. All right, let's move on to bonds. Bonds, I'm not going to spend too much time on these other charts. I'm trying to keep class within an hour. Bonds are still in a downtrend, although we're getting a little bit of a possible bullish reversal candle here. Now, I mentioned Thursday that I was seeing weird buy volumes. Actually, I had a friend of mine point this out to me, that he was seeing a lot of volume go into these bond funds, these ETFs that are very thinly traded. Not many people trade them. And it was almost like it was hiding a bond trade. Now, you could make the argument, well, how do you know that activity isn't selling or shorting? How do you know it's buying? Well, you don't know, but considering that you're already oversold, you're already well down in this downtrend, that you start to see the volumes like that. The assumption for me would be that somebody's buying right here. Now, no one can really know exactly where the bottom is, and most traders aren't big enough to create the bottom with their buying, but I just think that's interesting to note. That happened last week. Tuesday and Wednesday is when I noticed it. We've drifted lower since then, but now we'll see if that ends up being a bullish hammer candle formation. I'd like to see it close near the highs of the day there. That'd be a really strong bullish hammer formation if it can do that. But we're in a downtrend in bonds, and until that changes, we're assuming that trend is going to continue lower. Gold, we're still waiting to see if this ends up putting in a higher low. It hasn't yet. Well, it's kind of hovering around here, and actually, the more it hovers around here, the more it's likely it is to continue to go down. Remember what I always say: whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. I think that's kind of where we have right here. Now, could you have an up day and still be in the sideways range? Yeah. But, and gold's been moving down for a while as well. Could it start showing more of a trend reversal at some point? Yeah, it could, but I don't see it yet. So I'm assuming that trend is still down until I see stronger evidence that it could be reversing. There's a question about, can wave B drop lower than the beginning of wave A and still be a bearish ABC pattern? Were you here earlier in the update when I explained that? I'm just checking here, because I'm assuming you're talking about the SPY, right? Because I explained that earlier. I don't want to spend too much time on this, but I can explain it. But let me just draw it out. There can be situations in both bullish and bearish ABC patterns where wave B goes beyond the end of wave A. So could that be a bearish ABC pattern? Yes, it could. The problem is, though, is it rarely happens. So first of all, you're talking about a rare event. So you should not be seeing these all over the place. If you're seeing these all over the place, it's not right. You're not seeing it right. And I'll show you what you're probably seeing, and this is what you have to be careful of, okay? And second, if it does happen, it will barely go beyond the end of wave A. And another thing to watch for is when you get your wave C, does the overall move look really sideways? That could tell you where it's more likely to be what we call a regular ABC pattern. This is not a bearish ABC pattern. This is where people get stuck with this all the time. And that's why I say it should be very rare that you ever see it this way, because they'll see a move down, they'll see a real quick upward move, and then they'll see a downward move like this, and then another upward move like this. And they'll say, is that a bearish ABC pattern? Wave A, wave B, wave C. No, it isn't. You're in the trend. This doesn't look sideways. This doesn't look choppy. You went too far beyond the end of wave A. A lot of times your wave C will be really short. Now, if your wave C came all the way back up, there you start getting into gray areas again. But again, I will go back to, it went too far below the end of wave A, and it is not looking overly sideways because of that. And what you have to be careful of is what could be happening here is that could be, remember what forms bottoms is you get impulsive down followed by impulsive up. So if you're thinking that's a bearish ABC pattern and then it starts to go like choppy like this, I would say no, that's a trend reversal. You had impulsive down, impulsive up. You're getting corrective now. You're probably in a trend reversal. So that's the best advice I can give you. Same with a bullish ABC pattern. Wave A, if you get wave B that goes beyond the beginning of wave A, it'd be barely going beyond it. And usually wave C would come down to where this whole move would look sideways. And you're probably okay. But like I was showing on the Qs, I can't see that as a bearish ABC pattern right here. This is not wave A, wave B, wave C. Now, it's still, again, the argument though, this isn't looking real impulsive going up. So the way I'm looking at it is this is the bottom, this is a bottoming move right here, and this is a correction, kind of like these single corrections that we've had that we should roll over and drop off of that. But I think the problem that you run into there is you can try, if you're not careful, this is why you gotta stay away from low probability patterns, or try not to put too much emphasis on low probability patterns, is because you can go do this in any chart where you can make it almost look like it's going to do whatever you want it to do. Like if I really think the market's going to drop, and then I can play around with any sort of pattern and make it bearish, even if it's, well, it could be, because everything's a possibility. Is it possible though? Yeah, it's possible, but everything's possible, and that's what creates the problem. And so yeah, that's the best way I can explain it. It should be barely, if it does happen, it would be barely beyond the beginning of wave A, and it would be rare that it does that. It doesn't do that very often. All right, let's go to oil here. Yeah, it's true. We are in a rare market. Yeah, but there again, does that mean you start focusing on rare events or low probability moves? You can't deviate from your discipline. What I would say then, if you're worried about, if you feel yourself being drawn to analyze rare or expect rare outcomes or rare events, just go to the sidelines then, because you probably shouldn't be trading in that environment. Because you're flipping a coin now. You're guessing, really. Anytime I feel like I'm guessing in a market, that's a clear sign to sit out for a few days and not do anything. Not a good idea to be trading, and again, it's real easy to lose your discipline, and real easy to look at the market the way you want to look at it. If you're already bullish, if you already think we're at a bottom, there's plenty of things I could show you that could back that up. But there's also a ton I could teach you and show you that say we're not at a bottom yet, and probably more that I could teach you that say we're not at a bottom yet. So what I try to do every week is not have a bias when I start my analysis. Don't be a cheerleader for the market. You don't care whether it goes up or down. You just want to get the direction right, and so that should be your number one objective. Oil still looks like it's possibly in a trend reversal here. You've got impulsive down here, impulsive up that broke above some of these highs, and then this looks like wave A, wave B, wave C. Now, could it go down a little bit lower? Yeah, I mean, wave C is a little bit shorter than wave A. If that is it, again, this is a possible bullish ABC pattern. I'm not saying it is. You don't know for sure if it is until it breaks out higher. As soon as it breaks out higher, we can look back and say, yep, that was a bullish ABC pattern. So, now again, that doesn't mean we can't still trade that or anything. A lot of support right here. So if that is wave C, I expect it to kind of hold that support, start moving up. That would also give you a little bit of an inverse head and shoulders pattern if it can do that. I still think we're trying to reverse back into an uptrend on oil. Now, obviously, if over the next few days we break this support and we get real close to these lows down here, that would change. You'd have to look at this differently. Especially if this starts sliding really in. This is looking more impulsive down. Impulsive, when I use that word, it just means sharp movement in one direction, meaning you get several days up in a row as an impulsive move up. So this is an impulsive move up. You had one down day right here, but almost all the days were going higher. Impulsive down. Look, we had a little bit of a pause right here, but overall these days were all dropped. That's an impulsive move down. Corrective is more back and forth, more choppy. This is a kind of a corrective move back up. This is kind of a corrective move coming down, more choppy coming down. The dollar, we last Thursday we talked about, again, the possibility that this could be wave A, wave B, and maybe we get the dollar come down here for wave C. That would explain if we do see some near-term weak, and that could still be the case here. Could it be that we're working on wave C? Ultimately, though, we're viewing the dollar trend as continuing to move higher. Now, it may not come all the way back down. Today's a little bit of a bullish reversal candle, so maybe we start seeing the dollar move back up. And then we just say, okay, then that put in a higher low. If it breaks above here, it's a higher high. If it breaks above here, it's a higher high. It'd be acting like an uptrend again. But overall, it hasn't broken, and you can even draw a trend line through here. It hasn't broken that uptrend yet, so we're assuming that trend is going to continue. The VIX, all right, here's the VXY, and you can see it's trending up. So we had this little pullback right here with the recent rally. The VIX pulled back a little bit. But it's kind of trending higher here. But again, if you have the ability to pull up the actual VIX chart, yeah, see, we moved all the way back down. Here's the S&P. We moved all the way back down to the lows. And remember, we saw that in that hourly chart where it looked like this was impulsive down. This was kind of corrective back up, and now we're looking impulsive down. That's looking pretty weak. And again, this is not showing up. If you don't know what you're seeing right here, it's not showing up because we're up still. The SPY is up 0.5% right now. And so you're like, well, Jerry, the Dow's up. The Dow's up 200 points. Why are you saying it's bearish? That's good. It's up. Well, that's not telling the whole story. We opened all the way up here. We're trading all the way down here. So we're higher than where we closed the day before, but we're lower than where we opened. That's a bearish reversal. And so this is why you can't just go off of whether the indexes are up or down for the day. You have to be able to read these candles because they'll tell you momentum. They'll tell you and if you don't know how to see that momentum, you're at a big disadvantage. All right, let's go to the VIX here. So this is what I was seeing. So Thursday, we saw the market have that big bullish reversal. And remember, the reason why I thought we'd rally on Thursday after that gap down was the VIX opened right where it closed the day before. So here you have this big drop. It'll be easy. I can just show you the SPY right here real quick. It's all flip-flop back and forth here. So here you have this big drop on Thursday. Here's where we opened. Here's where we closed the day before. This was a big drop right here. You should have seen the VIX higher than Wednesday on that drop down, but that's not what I saw. I saw even, and it tried to go a little bit higher right at the open, but it should have been up here. So I'm like, we're probably going to rally off of this drop, and sure enough, we did. We had a pretty decent move down on the VIX. That kind of confirmed the rally. And that was part of why I thought that rally looked pretty healthy and everything. And then we had that big reversal, but the VIX didn't move up very much. It moved up to here, but here's where it closed, right about where we closed the day before. So it made me suspicious of the sell-off yesterday or Friday. It just didn't make it looked like a false sell-off is what it looked like. And then yesterday we saw the market attempting to go higher. VIX is moving a little bit lower. We're still above 30 though, is what I want to point out here. Here's 30. We've been up above 30 for a couple weeks now. And that's why we're getting these big whipsaw moves, and we're probably going to continue. If the market is going to rally a little bit higher, you're going to want to see the VIX get down below 30. If it can do that, I think you'll see stronger buying take place. I think that's part of the reason why we're seeing that tepid buying, is we're not seeing the VIX get down below 30 on any of these rally moves. So you have this big gap up this morning, and then the VIX barely dropped off of it. Now, you could make the opposite argument. You're seeing it really slide into the close, and you're not seeing the VIX spike up significantly. And we'll have to see. Maybe that'll happen a little bit closer to the end of the day. But that is something I'll look for. And remember, we said that maybe, although this is a bearish reversal candle, does it try to gap up one more time or try to rally one more time and then have that fail? It could. So that might be why we're not seeing the VIX fall. And it could be that, waiting to see what some of these earnings are going to be tomorrow, overnight, after the market closes. I don't know. But the thing I do want to point out on the VIX is that it is above 30 still. 40 is where you're expecting panic. So if we're above 40, that's going to happen on a Dow down 2,000 points day. If you see that any one of these days, you go right to the VIX and expect it to be at or above 40. All right, let's go back to chip stocks. They're showing again bearish reversal candle today. I still held the SARK as a hedge. I'll get to the portfolio here in just a second. I may add the SOXS because of that bearish reversal candle going into the close, because the SOXS should go up if the chip stocks go down, but we're still seeing underperformance by the chip stocks here. I mean, this even looks more corrective than the S&P chart, and really you're comparing this more with the QQQ chart, but even then with the QQQ chart, still the same thing. This is really looking sluggish. It's not rallying very well. Transports look very similar to the Dow chart. So you can make an argument this being a bearish ABC pattern here, because we did go beyond the beginning of wave A, but not by very much, barely. And then we're getting that bearish reversal candle today. So Bitcoin still looks like it still looks like it's poised to go lower. You got this downtrend line. It's trying to hold on to the support area right here. And then the high yield corporate bonds, the market's been kind of following this as well. Decent rally up off of those lows, but again, bearish reversal candle today, right near this key support resistance area. All right, so for the portfolio, now I did stay in Northrop Grumman because it actually slid below my stop. I wasn't able to watch the market close that day, and so I did end up, but you can see the volatility. I mean, look at the swings. Because before the market, like an hour before the market closed, it was down into here. My stop was down below here, and it was, even then, it closed like right where my stop was. So I wasn't too, it's not that big of a deal. Whether you stayed in or got out and got back in or whatever, it's not that big of a deal. But it reversed yesterday, and then big move up. There's a lot of volatility in the stock right now. I mean, that's crazy. That big of a drop and then this big of a rally. But I still like it. I still think it's going to break out and go higher at some point. LNG is down a little bit. Remember, we saw that gas, the chart of oil was in kind of that little bit of a sea leg there. my stops down here, so I'm allowing for this kind of choppy sideways move. Remember, whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it start moving sideways. Now, in the near term, could it dip down a little bit further in here? Sure. But I am allowing for that wiggle room with my stop all the way down at that previous low down there. So that's my natural gas trade. MPC is my oil refinery trade. Again, it's moving sideways. It's up a little bit today, but moving sideways. Previous move was up. It's trying to break out of this area right here, but it looks like it should end up doing that pretty soon. Archer Daniel Midland, a lot of volatility. Look at that swing Thursday, Friday, but my stop's down below here, so it's allowing for that. But it still looks like it's poised to keep moving higher. It's up today. Tekka was my basic materials trade. It's been just kind of going sideways since I got in, but I like this move up, and then this looks like a bullish ABC pattern right here. Nice move up right here, and then it's moving sideways. I think this should start moving up again. My stop's down below here, so either way, I'm not looking to get out. I don't think I'll be getting out. CIX is my coal trade. I still like this one too. It's down a little bit today, but it's kind of in that sideways move. This is the impulsive move up. Stop is down below here. So now, the danger though is, what if we get a big sell-off and these all come down and stop out? That's where I'm hedging with those inverse ETFs. I'm jumping in and out of those. If it looks like today, we're getting a bearish reversal candle, that could lead to a bigger move down. I want to make sure I don't get killed on these bullish trades if the market just has a panic sell-off. But if it immediately looks bullish again tomorrow, if we get a bullish reversal candle tomorrow, I'll jump right back out of those inverse ETFs. Like I said, I'm just using those to hedge right now. CF, a lot of volatility over those last couple of days, but or Thursday, Friday, but my stop's down below here, so we're still good. And then SARK, I held this one because you had the kind of that bearish whipsaw on Friday. I think I got it back in this one on Friday. I don't know if did I continue to hold this last Thursday? I can't remember if I did. I might have. But if I didn't, and I got back into this on Friday when we had that bearish reversal, because I wanted to have some hedge in case that went lower there. It has a bullish reversal candle. This is the inverse ETF, so this is going to go up if the market goes down. And this looks like a bullish reversal candle. You got higher highs, higher lows. So this should go up over the next couple of days, which means the market should come down. And then I was going to add SOXS. Now, if we don't go down, or we have a big rally tomorrow, or maybe there's a flat day tomorrow and then we rally Wednesday or something, or Thursday, I'll jump right out of this one. I may keep the SARK just to have a hedge on, just some hedge on in case we drop. But this is just really based off of this bearish candle today and a real bullish candle on SOXS. So I'm going to put my stop down below. Well, it really doesn't matter, because if this thing reverses right back down, I'll be getting out. So we'll just say about 60. What's the low of that day? 66. We'll say 65. I'll put a stop in at 65. The reason why I'm saying this stop isn't that big of a deal, because it may not even get to 65. If the market reverses back up and this comes down to 71 or something, I may be just getting out of it tomorrow just because I no longer need the hedge anymore, or I don't feel like I need the hedge. So that's why it really doesn't matter If it now has a really big rally tomorrow and this comes way down to 65, then yeah, I definitely want to stop out at 65. But this is unique, by the way. We're not going to be doing stuff like this in normal bull market conditions. This is just because we want to be doing something right now instead of just being in cash doing nothing and have these classes be very boring. So, and I want to teach you how you can use some of these tools to if you want to keep trading during market conditions. But again, we're not trying to make a killing in this bear market right now. We're just trying to see if we can grind higher, make a little bit of profit. I'll show you how that's kind of gone. In a second here. So let's do 130 shares. Now again, this is what you have to be aware of. If I did get stopped out, I'm going to lose $1,200, but it's less than 1% of my total account. I'm okay with that, but that amount might be high for some people. So take that into account. If that's too high, drop down the number of shares, get that risk level down to a level that you can handle emotionally. And then we're going to go ahead and buy this. But look at, so the portfolio right now, we're at, 2 weeks ago, we were at 132,000. And you'll notice that we've been fluctuating. I mean, right now we're at 130, a little over 135,000. We may go down to 134. As this thing kind of whipsaws back and forth. But the point is that, we were at 100, a month or so ago, we were at 125,000. So we've been just grinding out some profits, not big profits, but more than anything, we're just hoping not to lose any money. And the fact that we've been growing the account still in these conditions that's great. That's what we want to do. The other alternative is just go to cash, just be out, not do anything. But it's been nice to be able to kind of grind out some gains here. And the reason why it's kind of grinding is because we've got these hedges. I mean, I've got two trades here that they're only going to go up if the market goes down. Then all these other ones will probably go up if the market goes up. And so you're having a sloshing effect where you're making money on. I'm making money today on NOC, but I'm losing a little bit on SARK because SARK is down a little bit. So that's what I'm saying. It kind of has that grinding higher type effect to it. All right, that's all I have. I'll go over one stock here. Let's look under consumer staples. I want to save I think that's part of the reason why I'm going too much overtime is I'll do a more in-depth market update on Tuesdays. I'll still do a market update on Thursday, but it'll be a little bit more condensed. Maybe I'll leave out gold and the dollar or something like that, or just really quickly go over them. And then that's going to be the stock specific class. That's where we're going to spend more time going over potential trades. But consumer staples, I like this Corteva CTVA. Although again, the candle doesn't look great today. It's a kind of a bearish candle, but what I like, switches to signals here too. You could wait for that to go back to a buy signal. Not too far away from going back to a buy signal there. But I like this kind of inverse head and shoulders pattern right here. You could wait for it to break out. Maybe that's not a bad idea. Wait for the breakout, because if it breaks out, it should go up about the same distance as the base of the head to the bottom of the head. Project that distance upward, and you also got a cup with handle formation here. Big cup. That's your kind of your handle right here. And if it breaks out above here, this thing's going to rip. Should. The market doesn't have a big panic sell-off that would probably bring everything down. All right, that's all I have. Have a great week, everyone, and we'll see you on Thursday for the stock-specific class. Bye now.